Good morning traders, welcome to the Phoenix Blue morning update for Monday the 15th of March. Today we're going to be looking at the short-term commitments of traders' contrarian trades on gold and silver that I know Mark mentioned yesterday. One of those triggered yesterday, so we'll have a look at those in more detail shortly. First, let's have a look at the news. Before we look at what happened overnight and what have you, the thing that really needs to draw your attention to is just look at the level of US dollar news announcements over the next 2 days. We know this is the massive one. This is the FOMC statement, press conference and federal funds rate. But before that, tomorrow afternoon, we've also got building permits, CPI and core CPI. And also to this afternoon, core retail sales, PPI and retail sales, all those which could be factors in the decision making for these announcements down here, but also could create a lot of volatility in the markets, but also just so much news. We really need to be cautious around anything that has the US dollar involved over the next couple of days. So what we had overnight, we had the monetary policy meeting minutes from the Aussies. They came through largely as expected. There seems to be some commentary says it was slightly more hawkish, which means slightly more in favour of rate rises than potentially had been expected. The market doesn't seem to have overreacted to that overnight. Overnight also we've had the JPY, the Japanese monetary policy statement. That was largely, well, there was no change in rate. There was very little significance said about their own marketplace. They were looking outwards towards the rest of the world and the risks that remained there. They did, however, downgrade their expectation on inflation. And that's really their big problem and has been for many, many years. The commentary on this one has been that the market thinks that this is indicating that nothing is going to, well, obviously nothing's happened at this statement, but the next statement in April may be the time to expect more action from the Bank of Japan. We've still got, showing as a tentative, is the Bank of Japan press conference. Now that means that it may be happening, it may not be happening, but until the tentative flag disappears, we really need to be cautious around that currency because there could just be, out of the blue, an announcement which would cause us a problem. This afternoon, we've got the GDT price index, that's the dairy price index for the New Zealand dollar. With them economy being so dairy based, that is always significant. So if you're in trades around that, be aware of that. If you're intraday around that, that's when it's going to be critical. Okay, over to the Asian markets. Let's have a look what's happened there overnight. Here's the dollar yuan exchange rate. Not a lot of significance there. We've had another slightly bullish day, but we're still within this area here. The Chinese government have said they will maintain the yuan strength against the dollar. At the moment, they're keeping to their word. We just keep monitoring that. The Shanghai Composite had a slightly bullish day yesterday, has pulled back overnight. Again, not a lot to draw from that. It's all within the range of these recent weekly days, highs and lows. The Nikkei, on the other hand, we have had a bullish trend through here. We broke above these 2015 low levels, which we're seeing as significant. The response to the overnight news from the Bank of Japan has been negative in that we've had a bearish day. What will be of interest going forward over the next 48 hours is this level through here. Will the Nikkei fall through that, or will it bounce on that and go to new highs? A big, obviously, influence in that will be what the Fed say tomorrow night. Over on the dollar index, we've been talking about this. This yellow box is our neutral zone. We're bullish the dollar above this. We're bearish the dollar below it. As Mark said yesterday, however, these levels at 95.50 and 97.50 are key. And when price gets there, we'll be looking for potential trades on other currencies or on currency pairs that have levels at the same sort of level. One of those is obviously the euro. These levels here, the yellow lines again, they reflect where we see the equivalent levels for that 95.50 on the dollar index, which would be this one, and the 97.50, which would be this one, because obviously this market is inversed to the dollar. Over on the yen, well, we've mentioned the news overnight. Not a lot of action on the currency from that. We still have our order in at this level here. This is where we believe we've seen intervention from the Bank of Japan. They haven't actually confirmed that that's what they're doing, but we can't see another reason for these lows here, and for that reason we have another order in place. If price does reach those levels, we would expect the Bank of Japan to step in again. If we see a dollar strength, particularly after the FOMC statement, we'll be looking for a break above this trend line here for price to come back and retest this, and we'll be bullish on the long side there. We're aware of a level at 115.50, which would certainly be around our first target if we get the opportunity to trade there. That is a significant level. Okay, another trade that we are currently have an order in is the pound. We're looking for this trend line to be retested at this significant level here. That trade's been in place since yesterday. As you can see, when I took this slide, which was probably 5:30, 6 o'clock this morning, we were having to that point price was bearish. So we'll be looking for an entry in this trade today. If that doesn't happen, like most resting orders, we will be cancelling them ahead of the FOMC statement. Right, over to gold, and what I mentioned in the opening slide. We are currently looking at a 6-month COT commercial signal short. Now, the 6-month signal means that we've got a short-term bias to the short side. Our long-term bias on gold remains long, based on risk-off, risk-on scenario. The markets at the moment are so uncertain, we expect money to be running for cash and gold as safe havens. Here we've got a rising wedge. The price of gold broke below that wedge yesterday. We're now looking for it to retest the wedge at a level of, I think it's 1244. We had a successful long trade off that there last week, so we know it's a significant level. We're looking for price to pull back down there. We'll be taking early profits, as we will do in anything in any market this week because of all the news, but with a longer term target down here of around 1190. However, at 1190, we've got a confluence between this level and the trend line here. We will be stopping the short trade and reversing into a long trade, with going back with our major bias being long on gold. So we've got a short-term signal which we're taking advantage of and trading what we call contrarian down to this level, stop and reverse up to new highs is what we're looking for. Now, we've got a very similar situation on silver. Again, we've got the same type of 6-month short-term COT signal on the short side. We had a trend line and a level through here yesterday. We took this trade yesterday. Price actually came up and came within a whisper of it. It didn't trigger a trade, but then slightly later on in the morning came back, triggered, and moved away beautifully. We got profits off the table. Our stops at break even. We've no risk in this trade now, and we're looking for levels around here. We don't have such a long bias on silver. The technicals aren't as clear on silver as they are on gold, so at this moment in time we haven't got a point at which we'll be looking to stop and reverse long, but we do expect silver to follow gold in the longer term. Another commodity trade that we've been in for quite a long time now, we had entries through here. We've had a stop at break even, we've had money off the table. We've been looking for an opportunity to add into this market. You can see the green line here. This is the resting order that we had over the weekend or from the back end of last week. Price made a significant pullback yesterday, didn't reach that level, and has then been very bullish since then, and is actually now closed above what was a rising wedge, or simply just above that trend line, we may well have missed that opportunity. That's not a problem because we've already identified the next significant level. Our longer term target is up here. We will be looking for a break of that level, a pullback to that level, and then an add-in trade going long. So very much the bias there still remains long. We've got a conservative target there. We may not actually take everything off the table at that point. We may look for these highs up here. Okay, well, that covers everything for today. The big watchword is caution. All that news around. We've got the British pound budget as well tomorrow. Not always that significant on the FX side of things, but also something to keep an eye on. So please trade with caution this week. If you've got any questions, if you don't agree with some of our analysis, please just email us. We'd love to have a chat. We like to know what you're thinking. You're watching this on the Phoenix Blue Trading channel on YouTube. If it's the first time watching, you haven't watched before, or you haven't subscribed, please subscribe. You'll get an email every morning when this video goes up, but you'll also get an email when our weekend longer term view videos dissect and detect, and our Tuesday night video, which will be coming to you this evening, Trading Tuesdays, go on, so you can keep up to date that way. Okay, that's it for today. An interesting day ahead, even more interesting day to come tomorrow, and we'll look forward to speaking to you then. Thank you and goodbye.